Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Asia podcast. I'm Doug Krisner. You can join Brian Curtis and myself for the stories making news and moving markets in the APAC region. You can subscribe to the show anywhere you get your podcast and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.
Frederick Neumann, Chief Asia Economist and Co-Head of Global Research for Asia at HSBC. Frederick, big news this week will likely be obviously the debate tomorrow and also the CPI report. We're still kind of wrangling with the jobs report that was out late last week. It did help frame what could be the essential question, which is the U.S. economy slowing or is it stalling out? Now, I know it's tempting to say the U.S. economy is not the global economy, but then with China stumbling, it might as well be.
Yeah, if the U.S. economy stumbled, it would knock another leg out from under us because the Chinese economy is not really delivering that growth in polls. Europe is not really delivering it. And so everybody's looking to the U.S. to carry the day. But of course, if we get rising unemployment there and potential recession, then all bets are off. That would certainly push the global economy down a notch. And that would be felt across Asia as well in terms of trade, in terms of price pressures would fizzle. It would raise a whole set of challenges.
Well, speaking of price pressures, maybe we can talk about this deflation story in China. It clearly we see no sign of it abating. Prices have been dropping since last year, and we had a piece on the Bloomberg Terminal today indicating that maybe we have entered a new, rather dangerous stage. Is that hyperbolic, or are you really concerned about the extent to which we are in or see protracted deflation in China?
It's a challenge, and we know from other experience in other economies, notably Japan, for example, that a prolonged period of declining prices can sort of become very entrenched because people's expectations adjust to it, and it's very hard to get rid of this. So deflation is as big a problem, if not a bigger problem, than inflation, and so we need to take this seriously. What's needed really is a big a jolt to stimulus, a big jolt to the economy, to confidence, just to get the Chinese economy back on its feet. And the core measure, ultimately what matters, is to get inflation back up to a reasonable range. And it's clearly now undershooting what might one consider as being sort of a normal increase in prices over the course of an economic cycle.
You do have more policymakers talking about this. Yi Gang, the former governor of the People's Bank of China, said yesterday that policymakers need to focus on it right now. What does he mean and what does he want?
Yeah, there's really a sense of urgency in his remarks saying that we got to do something here. And what's needed is stimulus, because we have on the monetary side not really that much of a stimulus coming through. We have on the fiscal side a bit of a help, but nothing that smacks of those big packages we saw in the past. And so I think reading between the lines, the message here is, look, guys, let's turn on the spending tabs and get things going again, because otherwise things were just going to fizzle further and be harder to get at the car out of the rut again.
Have authorities been a little curious about the degree to which more stimulus might weaken the currency? Is that really the big worry here, do you think?
It was certainly constrained for many, many months. The opportunity that presents itself now is that because the Federal Reserve is expected to cut rates, the pressure on the currency have really relented. That opens the door for China then to maybe press ahead with easing as well. Maybe they're just waiting for the Fed to deliver its first cut as a 25, 50. But that really opens up an opportunity. One would think that interest rates will fall further in China in the coming months.
So we talk about the CPI numbers this week in the United States, and you just referenced the Fed. There's a program on Bloomberg that's almost as good as this one, Surveillance. And last night, before I went to bed, I heard Jim Bianco from his own company talking to the gang on Surveillance, saying that he'd be more worried, Frederick, if from here U.S. inflation numbers actually dropped quickly, because he would presume that that would only happen along with a dramatic fall off in growth. Do you see, some reasoning in that, and does it make sense?
Of course, if inflation were to drop very, very sharply and that indicates a sudden drop-off in demand and we're sliding into a recession, it would be very concerning. But ultimately, there are still inflation expectations are relatively high in the U.S. If you look at any survey, consumers still say price pressures are the number one thing that bothers them. So it'd be a long way to go from the inflation that we just saw in the last few years to really a deflationary spiral. I think the Fed at the moment needs to focus on growth rather than deflation. And if growth buckles, then of course we need to have more rate cuts. Certainly, if inflation suddenly turns negative, we gotta do something. But it's not really on the cards just yet.
We had a story a short while ago. Maybe you even actually heard it. The House in the States here passing legislation to blacklist Chinese biotech firms and their U.S. subsidiaries. Help us understand the risk to the Chinese economy right now with the level of geopolitical tension between Beijing and Washington.
Well, most of the technology restrictions that we've seen coming out of the U.S., most of those investment restrictions that you just referenced, they are not necessarily detrimental to current economic growth in China, right? They hit just a very high end, if you will, of tech investment, for example. They do affect sort of growth down the line, sort of in 4 or 5 years' time, because of that restricts China's ability to innovate, to generate new ideas. And of course, that has an impact. But I wouldn't over-exaggerate the impact it has on China's economy this year, next year, maybe in 2026, because really that's all about the property market. Let's face it, this is the lack of domestic demand. It's not so much the tech restriction. That's more of a strategic issue, and that really impacts of how we should think about the Chinese economy in 10 years' time from now if we really see an effective restriction on semiconductor investment, for example.
Yeah, so we've got domestic consumption, which clearly is stumbling a little in China, and then we've got the export regime. We'll get the China trade numbers today. They're expected later this morning. Should we not expect too much?
Well, actually, exports are still doing very, very well, particularly in volume terms. Now, the numbers that release are usually nominal numbers. They're not as strong as the volume numbers are because prices are falling in certain categories. So actually, exports remain a bright spot. And that's why for the Chinese economy, actually, one of the big worries is that the U.S. economy suddenly buckles and kind of takes down global demand with it, because that would really dampen a growth engine in China that's still working okay from a Chinese perspective, and that is exports.
What about the tariff part of that story? Is that significant in your mind?
It is significant, yeah, because it'd be highly disruptive if we really see some of these plans that have been proffered come to pass. That would potentially restrict China's ability to export a lot. Now, you might say, well, it's just the U.S. that's doing it. But the worry we might have is that if the U.S. imposes tariffs, then other economies might be forced to do the same, because essentially they would then be on the receiving end of a lot of imports from China. And so they might then raise their protectionists as well. So the worry here is a spiral. And to be honest, it's not just for China's economy that's worrisome, but it's for many, many economies, because let's face it, trade restrictions are just not good for global growth. And so there is a broader issue here at hand.
On the trade numbers, we are expecting exports to have advanced 6.6% year on year. As Fred mentioned, they've been pretty strong, although that is a little bit lower than the prior 7% gains. Imports supposed to be up 2.5%. That's well down from the 7.2%. Frederick Neumann has been with us from HSBC. Stephanie Leung, Chief Investment Officer at StashAway, with a closer look at global economic performance and also the market. Steph, thanks very much for coming into the studios with it. So let's start off with the United States. We'll get to China, where we've got deflation stalking the country. But in the U.S., it's more of a nuanced question whether or not it's just kind of slowing in the economy or whether it's stalling out. Your thoughts?
Yeah, thank you for having me. And I think, that's kind of the center of the debate right now, whether the U.S. is entering a recession or is this just a temporary slump, particularly because we have the election coming up in the next 2 months. And our view is that, it's kind of a slowdown, but we don't see a risk or kind of a clear sign of systemic risk happening in the economy. And if you look at kind of historical recessions, there's always excess combined with some systemic risk. For example, during the financial crisis, there was a housing bubble. And of course, there was a lot of shadow banking kind of lending going on. The consumer is also quite stretched. Right now, we don't actually see any kind of stress in the private sector or kind of in the banking sector for the U.S. So I think there are some signs that, for example, unemployment is slowly kind of grinding up. There's been a lot of talks about the SAM rule. And I think what Chairman Powell referred to it was kind of more a statistical phenomenon, which, I mean, SAM herself also agrees to. And for us, I mean, ultimately, it comes down to whether the consumer is still employed and also whether the consumer has the power to spend. And if we look at some of the higher frequency data, for example, credit card spending, I mean, the consumers are still very, very strong in the U.S. And unemployment rate, even though it's risen from very, very low levels, 4.2, 4.3%, these are by no means kind of even close to historical average, which is about 6%. So I think all in all, there is a slowdown, and particularly given that there's a lot of uncertainty going into election, businesses are saying that they are waiting for election result to spend. So we think actually these 2 months, I mean, could still see weaker data and a bit choppier markets. But overall, I think the U.S. economy is still fairly strong.
So Brian mentioned the deflationary story in China. We had this interesting piece on the Bloomberg terminal earlier in the day saying that those price declines have entered a new, and the term that BI applied here was dangerous. Is there, and I know we've talked about this in the past, but it feels like it's worth revisiting, that China could potentially enter the type of trap, the deflationary trap that Japan spent decades in. Is that possible in your opinion?
I think if we look at the data, there are a few things that are also quite alarming to us. Number one, key is the property market. And if we look at kind of the high frequency monthly data on property prices in China, I mean, that's still falling by annualized kind of 5-6% year on year. And there's no signs that that trend is actually reversing. Also, I think Bloomberg actually has a very, very good data series called the Credit Impulse. And that actually, what we found is that tends to lead the equity market by about 6 months. And the Credit Impulse is right now reading negative on a year-on-year basis. I mean, it has improved somewhat from the April lows. So April was actually the bottom, and it improved in the past few months, but still, the reading is still negative. And I mean, that tells us that there's a lower chance of a recovery in Chinese asset markets in the near term. And I think, I mean, the government, I think it's well aware of that. And I think you're seeing signs that they are trying to do more stimulus. There are talks about trying to encourage private investments. But I think, I mean, there's also the concern about the upcoming election as well, right? So right now, there's a lot of uncertainty about whether Trump or Harris will be in office. And I think that sort of plays into the minds of the Chinese leaders as to, I mean, how much or what kind of stimulus they should or can put out in the next 2 months. So I think they are also probably in a waiting mode with regards to Chinese kind of policies and how the U.S.-China relations play out. So I think that's kind of what's concerning is that in the near term, I think there's a low chance that they will be putting out significant policies. And on the other hand, conditions are actually deteriorating on a monthly basis.
So if we put all this together, it almost seems like there could be light at the end of the tunnel at some point in China. So would you say that in designing a portfolio that you would lean toward taking advantage of the lower numbers in China, or would you just ride some of the gains that we've seen in the U.S. that have peeled back a little bit and may have some more room to run?
Yeah, I think definitely these 2 months will be tough to navigate. But of course, for long-term investors, I mean, these are great times to accumulate themes or kind of assets that have long-term prospects. We did a study on kind of how the different asset classes perform post the first rate cut as well, given that we are entering a Fed rate cut cycle. And it turns out that, I mean, for equities, bonds, or even gold, I mean, they tend to perform quite well 6 to 12 months post the first rate cut. I think with regards to your question about whether we should kind of invest in US or in China, I think for example, if we look at kind of the US growth sectors, I mean, they are, I guess with the valuation correction, they're a bit more attractive than before. And particularly, I think if you look at the relative PE or valuation versus its own history, and you take out kind of bigger companies, some of the smaller companies or even like healthcare looks actually quite attractive from a long-term perspective. So I think, I mean, these are sectors that deliver the highest earnings growth in the long term. And I mean, these kind of short-term fluctuations actually provide very good entry points for long-term investors.
Before we let you go, Steph, I know you have a background in artificial intelligence, and I'm wondering how you're feeling about that trade these days.
Yeah, I think there's a lot of, I think that I guess in the past few months, there has been concerns about all these CapEx spends. If they would turn into actual revenues. And I think that's kind of the key debate right now for a lot of AI investors. But I think if you look at the latest research and also kind of the way the hyperscalers are spending, people that are close to the technology, they're betting that the scaling law still stands. And the scaling law, for those who are not too familiar with, is the I guess what's been powering all these investments is the fact that, I mean, the more you invest in these computing power, the more you're going to get out from it. And these are exponential. So all these hyperscalers are investing because they all believe that the more chips you put into a data center, the closer, the fastest you will get to AGI. And I think that's the race that's on for the next few years.
But it's scary when you look at a company like NVIDIA that traded up to around 140, dropped below 100, down to like 93, with no bad news.
Yes.
I mean, what happens if you actually get bad news?
Yes, and I think that it shows you that there has been a lot of froth, right? When everybody's talking about NVIDIA, when people like kind of all think that Jensen is God, there is a lot of froth in terms of the stock. I think right now with correction, some of that froth is gone. I mean, the story is still intact, right? Earnings growth is still phenomenon. Of course, I think the AI story should and will spread out to other chip makers and other sectors. So for example, I think if you think about the application layer, I mean, that's kind of where a lot of the big companies or a lot of opportunities will stand. And I think the biggest story there is personalized everything. Personalized healthcare, for example, personalized assistance. And I mean, these are yet to be discovered.
Just like the stuff that we're getting from Apple. It doesn't seem that it's like right around the corner, but apparently it's coming. Stephanie, out of time, but thank you. Stephanie Leung, Chief Investment Officer at StashAway.
So we are roughly 24 hours away from the debate between Vice President Kamala Harris and former President Donald Trump. Joining us now for a preview is Morris Reid. He is a partner at the consultancy firm Actum. Mr. Reid is also a former official in the Clinton administration. Mr. Reid, thank you so much for joining us and making time to help us preview, which I think we can all agree is a pretty high-stakes debate tomorrow night. To what extent have voters not yet made up their minds when it comes to this race?
Well, if you look at the 7 states or 6 states that matter, the swing voters are still on the fence. They certainly know about Donald Trump. He's got 100% name recognition. So that's the good news and the bad news for him. But for the vice president, this could be a pressure make or break debate because she's never been at this level and she's really starting to introduce herself to the wider public. So it's going to be quite high stakes.
So what is the most important issue? And I'll preface the question by saying that we had Frank Luntz on yesterday, the pollster, and he said that definitely that the costs of American households is the burning issue at the moment. Do you agree? And if not, what is?
I agree with Frank. He always on point and has his finger on the pulse. Every election comes down to pocketbook issues. The real question for every American is, will my life be better? Elections are always about the future, about aspiration and inspiration. Who's able to connect with them on the key issues? Pocketbook issues, bread and butter issues. Will my kid have a better future? Those are the issues that always matter. So elections are always about the future, not the past.
So for the vice president, I'm curious to get your take on the degree to which she would embrace her time with the Biden administration or perhaps weighted more toward trying to differentiate herself. Which is it?
Well, it's a little bit of both. It's funny enough. You always embrace the good and you distance yourself from the bad. And she's been doing that quite well. She's trying to thread the needle. So she has to embrace the good things, but she can never divorce herself from some of the challenges. So when you talk about the things that the Biden administration, in her opinion, has done well, the CHIP Act, some of the things around the economy, she's embracing them. But most Americans, or a lot of Americans, feel that there's tougher opportunities. It's been a challenging economy for them. But funny enough, a lot of people don't blame her for that. So she will take the best, embrace them, and she will distance herself from the good.
So, Morris, if we look at costs in the household sector for people, you would only imagine that they would go higher if Trump were to enact 100% tariffs on countries that he deems unworthy, that somehow don't believe in the U.S. dollar, don't support it, or whatever. And it really does raise the question, does the American household understand that? I mean, or do they assume that, well, this would be better for the economy, we want to reshore all of our manufacturing? And they understand, don't they, that would raise costs?
They don't. There's a disconnect between tariffs, the rhetoric around tariffs, and how that really impacts. The fact is that when you raise tariffs, that is really passed on to the consumers. So most Americans don't understand when the president says he talks tough or a candidate talks tough about tariffs, they don't realize that really means higher prices for them. So there's a real disconnect. One of the things that I always talk about is the price of eggs, really pocketbook issues. If people feel like groceries, gas, the things that they have to deal with every day are being more expensive, that tends to break against the incumbent. So the tariff issues, while tough talk, Donald Trump likes to talk tough, that really translates to more expensive goods, products, and services for the American people.
The GOP has labeled the vice president as the border czar, but as I understand it, as I recall, she was essentially tasked to go to Central American countries and try to discover the root cause of the migrant crisis. How does she, tomorrow night, address the immigration issue going forward?
She needs to be very clear that she's going to be tough on the borders, right? We do have an immigration crisis in America. What she has to do is offer a solution. She needs to recognize that there's challenges, and she needs to put forward her plan to make it better. Donald Trump certainly, and she will try to wrap him in the situation that happened where the president and the Senate had a deal, but he tanked it. She needs to really address the fact that there's a problem, and she needs to offer her solution. This is really where I say this. Most candidates don't need to get into details. They need to talk about governing principles, their philosophy, what they would do when they're assumed the highest level. This is what the vice president needs to do. She needs to recognize that there is a problem and offer a solution on what she would do to make it better.
But should she go on the offensive? Should she attack Trump if he, as I think many expect, if he attacks her?
Well, she's certainly going to have to be tough. One of the three keys that I've said that she has to do, she has to be authentic, she has to be relatable, and she has to be tough. People will look to see if Donald Trump can rattle her. If Donald Trump can rattle her, then maybe Putin could rattle her. Maybe Iran could rattle her. Maybe North Korea could rattle her. So she has to be very clear. She has to be tough, and she also has to be confident in her approach.
Morris Reid is a partner at the consultancy firm Actum. He's also a former official in the Clinton administration. Mr. Reid, thank you so much.
This is the Bloomberg Daybreak Asia podcast, bringing you the stories making news and moving markets in the Asia Pacific. Visit the Bloomberg Podcast channel on YouTube to get more episodes of this and other shows from Bloomberg. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen. And always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.